Given the provided price history and forecast for Bitcoin, a medium-term bullish investment strategy appears promising. The recent price action shows a period of consolidation, followed by a potential upward breakout. The forecast suggests continued upward momentum over the next week, with prices potentially reaching $103,000. Therefore, a strategic entry point could be around $98,000, allowing you to capitalize on the anticipated price increase. Setting a stop loss at $96,000 would protect your investment from significant downside risk, while a target price of $102,000 offers a reasonable profit potential. This strategy aligns with the bullish sentiment indicated by the price forecast and aims to capture a portion of the anticipated upward movement in the medium term. Given the historical price data and the one-week forecast for Bitcoin Cash, a cautious investment strategy with a short-term perspective appears most suitable. The price has exhibited volatility in recent weeks, with fluctuations between $422 and $482. Although the forecast suggests a slight downward trend, the price is expected to remain relatively stable within a range. Therefore, a short position could be considered, with an entry price around $438, aligning with the forecast and recent price action. A stop loss could be set at $447 to limit potential losses if the price unexpectedly rises. The target price would be $427, aiming to capitalize on the predicted downward movement. This strategy allows for potential profit while managing risk within a short time frame. Based on the provided historical price data and the one-week forecast for stacks, a short-term investment strategy appears to be the most suitable approach. The historical prices show a downward trend over the past 2 weeks, and the forecast suggests this trend will continue, with prices potentially dropping below the current support level. This bearish outlook makes a short position the most logical choice. To execute this strategy, an entry price of $1.55, slightly above the current price and close to the recent support level, would be appropriate. A stop-loss order should be placed at $1.61 to limit potential losses if the price unexpectedly rises. The target price for this short position would be $1.45, aligning with the forecast and allowing for a profit before reaching the predicted support level. This strategy aims to capitalize on the anticipated price decline of stacks in the short term. Based on the provided Ethereum price history and forecast, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a volatile trend, with significant fluctuations both upwards and downwards. While the recent price action has seen a decline, the forecast suggests a slight recovery in the coming week. This indicates a potential for consolidation before a more definitive trend emerges. Therefore, a long position could be considered, with an entry price around $3,250, aligning with the predicted low point in the forecast. The stop loss should be placed at $3,130, just below the recent support level, to minimize potential losses. The target price could be set at $3,450, representing a reasonable upside potential based on the historical price range and the forecast's projected recovery. This strategy allows for a moderate risk-reward ratio while capitalizing on the potential for a rebound in Ethereum's price within the medium term. Given the Ripple price history and the positive forecast, a medium-term investment strategy appears promising. The historical data demonstrates a general upward trend, with recent fluctuations suggesting consolidation before a potential breakout. The forecast indicates continued upward movement over the next week, supporting the bullish outlook. Therefore, an investment strategy would involve taking a long position in Ripple. An entry price around $2.60 would allow for a potential entry point near the current price, while a stop loss at $2.50 would limit downside risk. The target price could be set at $3.05, aligning with the higher end of the forecast and providing room for substantial gains. This approach capitalizes on the anticipated upward momentum while managing risk through a well-defined stop-loss mechanism. Given the provided price history, forecast, and support/resistance levels for Binance Coin, an aggressive investment strategy would favor a short-term approach. The historical price data shows a period of consolidation and slight upward movement, with the current price hovering near the support level of $688.86. The forecast suggests a potential upward trend, but with a slight dip in the coming week. This indicates a volatile environment where short-term price fluctuations could present opportunities for profit. Therefore, a long position is recommended for this strategy. An entry price of $695 would allow you to capitalize on the potential upward movement, aligning with the forecast and slightly above the current support level. The stop loss should be set at $689 to minimize potential losses if the price drops below the support level. The target price should be set at $715, aiming to capture a significant portion of the predicted upward movement before the price reaches the resistance level. This strategy leverages the potential for short-term price appreciation while managing risk through a well-defined stop loss. Given the price trends and forecast for Stellar, a medium-term investment strategy appears promising. The historical prices show a fluctuating pattern, with a recent dip followed by a slight upward movement. The forecast suggests a continued upward trend, with prices potentially reaching $0.488 in the coming weeks. This indicates a potential for capital appreciation in the medium term. Therefore, a long position in Stellar is recommended for a medium-term investment horizon. An entry price of $0.447, near the current price, allows for immediate participation in the potential upward movement. The stop loss should be set at $0.429, the recent support level, to protect against unexpected price drops. The target price should be set at $0.488, aligning with the forecast high, allowing for a substantial profit potential. This strategy balances risk and reward, aiming to capitalize on the anticipated price increase while mitigating potential losses. Based on the provided information for Toncoin, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a recent downward trend, with the price hovering around the support level of $5.302. The forecast indicates a continued decline in price over the next week, reaching a potential low of $5.34. Considering this bearish outlook, a short position would be the most advantageous. An entry price of $5.40 would allow you to capitalize on the anticipated price drop while minimizing risk. A stop loss at $5.52 would protect your investment against any unexpected price surges, ensuring you limit potential losses. The target price should be set at $5.25, aiming to capture a significant portion of the projected price decline. This strategy aligns with the short-term investment perspective, seeking to profit from the anticipated price movement within a limited time frame. Given the price trends and forecast for Cardano, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating pattern, with recent dips towards the support level of $0.9312. However, the forecast suggests a gradual upward movement, potentially reaching $1.06 over the next week. This indicates a potential for Cardano to recover and gain value in the medium term. Therefore, a long position is recommended. An entry price of $0.968, slightly above the current price and below the resistance level, allows for a potential profit as the price moves towards the forecast. The stop loss should be set at $0.9312, aligning with the support level, to minimize potential losses. The target price should be set at $1.06, aiming to capture the majority of the projected upward movement. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses in a medium-term timeframe. Given the price trends and forecast for Litecoin, a short-term investment strategy focusing on a long position appears to be the most suitable approach. The historical prices show a slight upward trend, with the current price hovering near the support level of $109.90. The forecast suggests a continued upward trajectory, with prices potentially reaching $112. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price, with a stop loss set slightly below the support level at $109. The target price should be set at $117, aligning with the resistance level and allowing for potential profit taking before encountering significant resistance. This strategy capitalizes on the anticipated upward momentum and aims to maximize returns within a short time frame. Given the current price trend of STRK and its one-week price forecast, a short-term investment strategy focusing on a long position appears promising. The historical price data reveals an overall upward trend, with the price hovering near its recent highs. The forecast suggests a continuation of this upward momentum, with prices expected to rise over the next week. This indicates a bullish outlook for STRK in the short term. Considering this, an entry price of $4.85 aligns with the current market price and the projected price increase. A stop-loss order should be placed at $4.72, below the support price, to limit potential losses. The target price is set at $5.10, aiming to capitalize on the anticipated price surge towards the resistance level. This strategy allows for potential profit while mitigating risk through a well-defined stop-loss order. Based on the provided price information for Aptos, a cautious investment strategy would be appropriate. The 2-week price change shows a slight downward trend, and the forecast suggests further declines in the coming week. While the support price of $8.47 provides a potential floor, the resistance level of $12.88 is significantly higher, indicating a limited upward potential in the near term. Given this outlook, a short-term investment strategy with a short position is recommended. An entry price of $9.15, close to the current price and above the support level, would be suitable. The stop-loss should be set at $9.48 to minimize potential losses if the price unexpectedly surges. The target price could be set at $8.58, aligning with the lowest forecast price, allowing for a reasonable profit margin while mitigating risk. This strategy aims to capitalize on the anticipated price decline in the short term, taking advantage of the current market conditions. Given the current price trends and forecast for STRK, a cautious investment strategy would focus on a short-term approach. The historical prices show a general downward trend over the past 2 weeks, with the forecast indicating further declines. The current price is near the support level of $0.3989, suggesting that the price may find some temporary support there. However, the resistance level at $0.4709 indicates that a significant upward move is unlikely in the near term. Considering these factors, a short position on STRK appears to be the most suitable strategy. An aggressive short-term investment strategy could involve entering a short position at $0.410, a price slightly above the current price. The stop-loss should be set at $0.430 to protect against any unexpected price surges. The target price could be set at $0.370, aiming to capitalize on the anticipated decline towards the support level. This strategy allows you to potentially profit from the downward momentum while managing risk through a well-defined stop-loss. Based on the provided Ethereum Classic price information, a short-term investment strategy with a focus on a short position appears to be most suitable. The forecast price suggests a downward trend, with Ethereum Classic potentially dropping from its current price range to around $25. This aligns with the historical price data, which shows a slight downward trend over the past 2 weeks. While the support price sits at $24.58, the resistance at $32.53 is relatively far away, indicating limited upward potential. Therefore, an aggressive short-term strategy would involve entering a short position at around $26, aligning with the current price range. The stop-loss should be set at $27 to limit potential losses if the price unexpectedly rises. The target price for this strategy would be $25, aiming to capitalize on the anticipated price decline. This approach allows for potential profit from the short-term bearish trend while minimizing risk through a well-defined stop-loss. Based on the provided price information for Polygon, a cautious investment strategy is recommended. The historical price data reveals a volatile trend with recent fluctuations below the resistance level of $0.5237. The forecast price suggests a continued downward trajectory, with the lowest predicted price falling below the support level of $0.4396. This indicates a bearish outlook in the short to medium term. Given this outlook, a short position is advisable. An entry price of $0.488, slightly above the recent historical low, allows for a margin of safety. The stop loss should be placed at $0.501, above the entry price, to minimize potential losses. The target price can be set at 43 cents, aiming to capture a significant portion of the anticipated decline. This strategy prioritizes risk management and capital preservation over aggressive profit maximization, aligning with a cautious investment approach in the current market conditions. Based on the provided price information for AEVO, a cautious investment strategy would be advisable. The 2-week price change demonstrates a clear downward trend, with the forecast indicating further declines. Although the support price is at $0.3069, the current price is relatively close to this level, suggesting a heightened risk of a further drop. Considering the bearish outlook and the potential for price to reach the forecasted low of $0.309, a short position would be more suitable for this scenario. An entry price of $0.335, slightly above the current price, would allow for some room for price fluctuation before entering the short position. The stop loss should be placed at $0.343, slightly above the entry price, to minimize potential losses if the price unexpectedly rebounds. The target price should be set at $0.307, aligning with the forecasted low and ensuring a reasonable profit margin. This strategy prioritizes risk management and capital preservation in a market exhibiting bearish momentum. Based on the provided price history and forecast for optimism, a cautious short-term investment strategy appears most suitable. The historical data reveals a fluctuating trend with recent dips, and the forecast predicts a continued decline in price over the next week. While the support price offers a potential floor, the resistance level is relatively far away, suggesting limited upward momentum. Therefore, a short position is recommended, aiming to capitalize on the anticipated price decrease. An entry price around $1.80 would allow you to enter the market near the current price and capitalize on the potential downward movement. A stop loss should be set at $1.88 to minimize potential losses if the price unexpectedly rises. The target price could be set at $1.73, aligning with the support price and offering a reasonable profit margin. This strategy prioritizes risk management while seeking to profit from the short-term bearish outlook for optimism. Based on the provided price data for STRK, the historical prices show a downward trend over the past 2 weeks, indicating a bearish sentiment. The forecast further reinforces this outlook, predicting a continued decline in the coming week. The current price is hovering near the support level of $0.4111, suggesting a potential bounce. However, the resistance level at $0.4689 is relatively high, making it unlikely for the price to break through in the short term. Considering these factors, a short-term bearish strategy appears to be the most suitable approach. An entry price of $0.430 would allow you to capitalize on the expected price decline. The stop loss should be set at $0.448, slightly above the recent high, to limit potential losses. The target price could be set at $0.406, aligning with the forecast and allowing for a reasonable profit margin. This strategy capitalizes on the short-term bearish momentum while managing risk effectively. Based on the provided Solana data, a short-term bearish strategy appears most suitable. The 2-week price history reveals a downward trend, and the forecast predicts continued decline. Although the support price sits at $182.86, the forecast suggests Solana could drop below this level. This indicates a potential for profit from short selling. Therefore, a short position with an entry price of $190 would be advisable. This price point allows for entry slightly above the current price and aligns with the forecasted decline. The stop loss should be set at $196 to protect against unexpected upward movement. The target price should be set at $180, aiming to capture a portion of the forecasted price decrease while staying above the support level. This strategy capitalizes on the short-term bearish outlook and allows for potential profit within a limited timeframe. Given the historical price data for Jupiter and the provided forecast, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price at $0.772 suggests a potential floor for the price, while the resistance at $1.0662 indicates significant hurdles for upward movement. The forecast suggests a price drop from its current level towards the support price, making a short position potentially profitable. Therefore, a short-term investment strategy would involve entering a short position at $0.838, aligning with the current price. A stop loss should be placed at $0.859, the highest recent price point, to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.772, the support level, allowing for a potential profit while avoiding excessive risk. This strategy aims to capitalize on the anticipated price decline while minimizing potential losses by setting a tight stop loss. Based on the provided price information for render, a short-term investment strategy appears to be the most prudent approach. The 2-week price history demonstrates a downward trend, with the forecast indicating further declines. While the support price is at $6.978, the resistance level is at $8.889, suggesting limited upward potential. The current price is hovering near the support level, indicating a potential for further downward movement. Therefore, a short position on render is recommended for a short-term investment horizon. An entry price around $7.04, slightly above the current price, would allow for a small margin of safety. A stop loss should be placed at $7.30, slightly above the recent highs, to limit potential losses. The target price could be set at $6.978, aligning with the support level and offering a reasonable profit potential. This strategy capitalizes on the anticipated price decline while minimizing risk through a well-defined stop loss order. Based on the provided price information for Solana name service, a short-term bearish strategy appears to be the most suitable. The historical price data reveals a downward trend, with the recent price hovering around 22 cents. The forecast predicts further declines, suggesting a continued bearish sentiment in the short term. Therefore, an investment strategy focused on a short position would be advisable. A potential entry price could be around $0.225, aligning with the current price and the forecast's initial dip. To manage risk, a stop-loss order should be placed at $0.236, slightly above the current price and the resistance level. The target price could be set at 21 cents, aiming to capitalize on the anticipated price decline. This strategy allows for a short-term profit opportunity while mitigating potential losses through the stop-loss mechanism. Given the provided historical price data and forecast for Doge-Coin, a cautious medium-term investment strategy appears suitable. While the price has shown some fluctuations, the recent 2-week price change indicates a slight downward trend. However, the forecast suggests a potential uptick in the coming weeks, with prices possibly reaching around $0.375. Therefore, a long position is recommended, aiming to capitalize on this potential upward movement. A conservative entry price could be set around $0.345, slightly below the current price, allowing for a margin of safety. The stop loss should be placed at $0.33385, the identified support price, to minimize potential losses. The target price could be set at $0.375, aligning with the forecast and offering a reasonable profit margin. This approach allows for a balanced risk-reward profile, taking advantage of the potential upside while mitigating potential downside risks. Based on the provided price information for PEPE, a cautious short-term investment strategy appears most suitable. The recent 2-week price history shows a clear downward trend, with the forecast indicating further declines in the coming week. While the support price offers a potential floor, the current price is relatively close to this level, suggesting a higher probability of continued downward movement. Therefore, a short position on PEPE is recommended. An entry price around $0.0000179, aligned with the recent price lows and the forecast, would be prudent. The stop loss should be set at $0.0000182, slightly above the current price to minimize risk from potential short-term price rebounds. The target price could be set at $0.0000169, aiming to capture a portion of the anticipated decline towards the support level. This strategy prioritizes risk management while seeking to capitalize on the prevailing bearish sentiment in PEPE. First, based on the historical price data and the provided forecast for SHIB, the investment strategy should be a short-term approach. The price has been fluctuating within a relatively narrow range recently. The forecast suggests a slight downward trend in the coming week. Given this, a short position would be the most suitable strategy to capitalize on the potential for a price decline. For this strategy, the entry price should be set at $0.0000225, aligning with the forecasted price. The stop loss should be placed at $0.0000229 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.0000214, slightly above the lowest forecasted price, allowing for a reasonable profit margin before the price potentially rebounds. This short-term strategy aims to take advantage of the anticipated short-term downward movement in SHIB. Given the price trends and forecast for DOG-COIN, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests DOG-COIN could drop from its current price to as low as $1.49, while the support price sits at $1.493 and resistance at $1.818. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $1.75 would be ideal, aligning with the forecasted price. The stop loss should be set at $1.818 to protect against any unexpected price recovery. The target price should be set at $1.49, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $1.493. This strategy aims to capitalize on the short-term downward momentum of DOG-COIN while managing risk effectively. Based on the provided historical price data and forecast for Doge-Coin, a short-term bearish investment strategy appears to be the most suitable approach. The historical prices show a downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. The price is currently hovering near the support level of $0.006288, indicating a potential for further downward movement. A short position could capitalize on this anticipated decline. An aggressive short-term investment strategy could involve entering a short position at the current price of around $0.0063. A stop-loss order could be set at $0.00658, above the recent high, to limit potential losses. The target price could be set at $0.00613, slightly above the lowest predicted price in the forecast, allowing for profit taking before the price potentially finds support. This strategy aims to capitalize on the short-term bearish momentum of Doge-Coin while managing risk through a well-defined stop-loss order. Given the historical price data and the forecast for Near Protocol, a cautious investment strategy focusing on the short term appears most suitable. The historical prices show a recent downtrend, with the price dropping below the $5.50 level. The forecast suggests this downward trend might continue, with the predicted price hovering around $5 for the next week. The support price is at $4.754, indicating a potential floor for the price. Therefore, a short position on Near Protocol is recommended. An aggressive entry point could be around $5.09, aligning with the predicted price. The stop loss should be set at $5.15, slightly above the entry price, to minimize potential losses if the price unexpectedly rises. The target price could be set at $4.75, aiming to capture a portion of the potential downside movement towards the support level. This strategy capitalizes on the anticipated short-term price decline while managing risk through a defined stop-loss order. Based on the provided price information for Internet Computer, a cautious investment strategy focusing on the short term appears most suitable. The historical price data shows a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $9.79. The forecast predicts continued stability around this level, with no significant upward or downward movement anticipated. Considering this outlook, a short position could be considered to capitalize on any minor price fluctuations. An entry price around $10 would allow you to enter the market as prices approach the support level. The stop loss should be set at $10.20 to minimize potential losses if the price unexpectedly rises. The target price could be set at $9.80, aiming to profit from a small decline towards the support level. This strategy prioritizes risk management and aims to capitalize on short-term price movements within a stable market environment. Based on the provided price information for Injective, a cautious investment strategy focusing on the short term would be advisable. The historical price data reveals a fluctuating trend with recent downward movement. The forecast also suggests a potential continuation of this downward trend, with prices expected to hover around the support level. Considering this outlook, a short position would be the most suitable approach. An entry price of $21.50 would allow for entry near the current price level while anticipating further decline. The stop loss should be set at $22 to limit potential losses if the price unexpectedly reverses. The target price could be set at $20.50, aiming to capture a portion of the anticipated downward movement. This strategy prioritizes risk management and capitalizes on the short-term bearish outlook for Injective. Based on the provided price history and forecast for BTC, a cautious medium-term investment strategy appears most suitable. The historical data reveals a downward trend over the past 2 weeks, with the forecast indicating further declines. While the support price sits at $417.80, offering a potential floor for the price, the resistance level at $470.20 suggests significant hurdles for upward movement. Considering this outlook, a short position on BTC seems prudent. An entry price around $440, slightly above the current price and below the immediate resistance, allows for some room for price fluctuation before entering the position. The stop loss should be set at $450, safeguarding against unexpected upward movements. The target price could be positioned at $410, aiming to capture potential downside movement towards the support level. This strategy balances risk and reward, allowing for potential profits while mitigating losses in case of a market reversal. Based on the provided historical price data and the forecast for THETA network, a short-term bearish strategy appears to be the most suitable. The recent price history shows a downward trend, with the forecast indicating further declines in the coming week. Although the support price is at $2.224, the forecast suggests a potential drop below this level. Therefore, an aggressive short-term investment strategy would involve entering a short position at $2.40, the current price close to the historical high. The stop loss should be placed at $2.47 to limit potential losses if the price unexpectedly rises. The target price for this strategy is $2.15, aligning with the lowest point predicted by the forecast. This strategy aims to capitalize on the anticipated decline in THETA network's price within the short term. Given the price trends and forecast for WorldCoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The support price is at $2.194, indicating a potential floor for the price. However, the resistance at $2.356 suggests limited upside potential. Considering the forecast, a short position is advisable to capitalize on the anticipated decline in prices. For a cautious short-term investment strategy, an entry price of $2.22 would be ideal, aligning with the current price and allowing for a margin of safety. The stop loss should be set at $2.28 to protect against any unexpected price recovery. The target price should be set at $2.05, slightly above the forecasted lowest price, allowing you to take profits before the market potentially bounces off the support level. This strategy aims to minimize risk while capturing potential profits from the anticipated downward price movement. Given the provided price information for Hooked Protocol, a cautious investment strategy focusing on a short-term perspective is recommended. The 2-week price history reveals a downward trend, and the forecast suggests further declines. Although the support price is at $0.3532, the current price is significantly above this level, indicating a potential for further downward movement. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price around $0.379 could be considered, as it aligns with the recent price action and the forecast's initial decline. The stop loss should be set at 39 cents to minimize potential losses if the price unexpectedly rises. The target price could be set at 34 cents, aiming to profit from the predicted price drop towards the support level. This strategy prioritizes risk management and aims to capitalize on the short-term bearish outlook for Hooked Protocol. Based on the provided data for Artificial Superintelligence Alliance, the 2-week price change demonstrates a volatile trend with a slight downward inclination. While the forecast predicts a further decline in the coming week, the historical price data shows some resilience near the support level. Considering this mixed outlook, a short-term investment strategy with a cautious approach seems appropriate. A long position is not recommended at this time due to the bearish forecast and the potential for further price drops. Instead, a short position could be considered, aiming to capitalize on the anticipated decline. An entry price of $1.32, aligning with the forecasted price, would be suitable. To manage risk, a stop-loss order should be placed at $1.37, slightly above the entry price to protect against unexpected price reversals. The target price could be set at $1.25, aligning with the support level and allowing for potential profit before the price potentially rebounds. Polkadot's 2-week price change shows a downward trend, aligning with the 1-week forecast suggesting further declines. The forecast indicates Polkadot could drop from its current price to as low as $6.58, while the support price sits at $6.405 and the resistance at $7.742. This bearish outlook in the short term suggests a short position is the most suitable strategy to capitalize on the anticipated decline in prices. Therefore, an aggressive short-term investment strategy would involve entering a short position at $7.19, the current price. To manage risk, a stop loss should be placed at $7.42, slightly above the resistance level, to protect against unexpected price surges. The target price should be set at $6.405, the support level, allowing for potential profits before the market reaches its potential floor. Given the price trends and forecast for Filecoin, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a slight downward trend recently, with the current price hovering near the support level of $4.928. The forecast suggests a potential dip towards $5.12 in the coming days, indicating a bearish outlook in the short term. Therefore, a short position is advisable to take advantage of the anticipated decline in prices. An entry price of $5.25 aligns with the current price and the forecasted dip, while a stop loss at $5.36 protects against unexpected price surges. The target price could be set at $4.95, aiming to capture potential profits before the price reaches the strong support level. This strategy prioritizes risk management by setting a stop loss and aims for modest gains in the short term, aligning with the cautious approach suggested by the price data and forecast. Given the provided price history and forecast for Conflux, a short-term bearish strategy appears most suitable. The historical prices show a downward trend over the past 2 weeks, and the forecast predicts further declines. While the support price at $0.1423 offers a potential floor, the resistance level at $0.2051 is significantly distant, suggesting limited upward potential. Therefore, a short position is recommended. An entry price of $0.155, slightly above the current price and below the immediate resistance, allows for potential profit as the price moves towards the support level. A stop loss should be set at 16 cents, above the entry price, to limit potential losses. The target price can be set at 14 cents, a conservative target that aligns with the forecast and provides a reasonable profit margin. Based on the provided Ethereum name service price information, a short-term bearish investment strategy is recommended. The 2-week price change shows a downward trend, and the 1-week forecast anticipates further declines. The historical prices suggest a recent consolidation around the $32 to $34 range, with the current price hovering near the lower end of this range. The support price of $32.88 indicates a potential floor for the price, while the resistance at $42.13 suggests limited upside potential. Given this outlook, entering a short position at $33.50 allows for capitalizing on the expected price decline towards the support level. To manage risk, a stop loss should be placed at $34.20, safeguarding against any unexpected price surges. The target price for this short-term trade could be set at $31.50, aiming to capture a significant portion of the anticipated decline. This strategy leverages the bearish price momentum and aims to generate profits within a short timeframe by anticipating a drop in Ethereum name services value. Based on the provided avalanche price information, a cautious investment strategy with a short to medium-term perspective appears most suitable. The recent price history reveals a fluctuating trend with a slight downward bias. The forecast suggests a continuation of this downward movement, albeit with some potential for minor recovery. Considering this outlook, a short position is recommended with an entry price around $37. The stop loss should be placed slightly above the recent high of $43 to minimize risk from an unexpected price surge. The target price could be set around $35, aligning with the support price and the forecast's lowest point. This strategy allows for capitalizing on the anticipated price decline while managing risk effectively. Given the price trends and forecast for BTC, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $0.04302. The forecast suggests BTC may continue to decline slightly in the coming week. However, the resistance level at $0.05243 indicates that there is a potential for a rebound in price. Therefore, a short position is advisable to capitalize on the potential for a price decrease towards the support level. An entry price of $0.0460 would allow you to enter the trade near the current market price, while still leaving room for a potential price drop. The stop loss should be set at $0.0470 to protect against any unexpected price surge. The target price should be set at $0.0435, slightly above the support level, allowing you to take profits before the market hits major support. This strategy aims to capitalize on short-term price fluctuations while minimizing risk. Given the price trends and forecast for PENDLE, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price is at $3.714, suggesting a potential floor for the price, while the resistance is at $4.874, indicating a significant barrier to upward movement. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $4.04, aligning with the current price and the recent high, would be suitable. The stop loss should be set at $4.27, protecting against any unexpected price surges. The target price should be set at $3.71, slightly above the support level, allowing you to take profits before the market potentially hits major support. This strategy aims to capitalize on the short-term bearish momentum of PENDLE while managing risk effectively. Given the price trends and forecast for the sandbox, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend in recent weeks, with the current price hovering near its support level of $0.5529. The forecast suggests the sandbox could dip further, reaching around $0.578 in the coming week. This indicates a slightly bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the potential for a price decline. An entry price of $0.588 aligns with the current market price and the forecast. The stop loss should be set at $0.604, slightly above the current price, to protect against any unexpected upward movement. The target price should be set at $0.553, below the support level, allowing you to take profits before the price potentially reaches a significant low. This strategy aims to minimize risk while taking advantage of the anticipated short-term price decline in the sandbox. The provided data for Decentraland suggests a cautious approach to investment. While the historical price shows some upward movement, the recent forecast indicates a potential dip in the coming week. The support price at $0.4758 acts as a potential floor for the price, while the resistance at $0.6026 suggests limited upside potential in the near term. Given these factors, a short-term investment strategy focusing on a short position seems more prudent. An entry price of $0.505, slightly above the current price and the predicted low point, would allow for some buffer. A stop loss at $0.514, slightly above the entry price, would limit potential losses. The target price could be set at 48 cents, aiming to capitalize on the predicted price decline. This strategy aims to capitalize on the short-term bearish outlook for Decentraland while minimizing potential losses through a well-defined stop-loss mechanism. Based on the provided price history and forecast for ENG coin, a cautious short-term investment strategy appears most suitable. The historical prices show a downward trend over the past 2 weeks, and the forecast suggests further declines in the coming week. The price is currently hovering near the support level of $0.1911, indicating a potential for further downward movement. Therefore, a short position is recommended to capitalize on this anticipated price decline. An entry price of $0.205, slightly above the current price, allows for a small margin of safety while still capturing potential downward momentum. The stop loss should be set at $0.213, just above the recent resistance level, to limit potential losses. The target price can be set at $0.191, aligning with the support level and aiming to capture the majority of the anticipated price decline. This strategy prioritizes risk management while seeking to profit from the bearish outlook for ENG coin in the short term. Based on the historical price data and the provided forecast for Uniswap, a cautious short-term investment strategy appears most suitable. The price history shows a slight downward trend, and the forecast suggests this trend might continue in the coming week. While there is a slight possibility of a rebound, the risk-reward ratio favors a short position. Therefore, I recommend entering a short position at $14, as it aligns with the current price and the recent price decline. The stop loss should be placed at $14.50 to mitigate potential losses if the price unexpectedly rises. The target price for this short position could be set at $12.50, taking into account the potential for a further decline based on the forecast. This strategy aims to capitalize on the anticipated downward movement while managing risk through a well-defined stop-loss order. Given the provided price history and forecast for Chainlink, a short-term investment strategy appears most suitable. The recent price history shows a slight downward trend, with the forecast suggesting a continued decline over the next week. The price is currently close to the support level of $21.62, which indicates a potential bounce in price. However, the forecast suggests this bounce might be short-lived, followed by a further decline. Therefore, a short position could be advantageous to capitalize on this anticipated downward movement. An entry price of $21.80 would allow for a quick entry into the short position, aligning with the current price and the potential for a slight bounce before the predicted decline. A stop loss should be set at $22.50 to mitigate risk in case the price unexpectedly moves upwards. The target price could be set at $20.50, aiming to profit from the forecasted price drop while leaving room for potential fluctuations in the market. This strategy focuses on a short-term outlook, aiming to capture the anticipated price decline within the next week. Based on the provided information for Aave, a short-term bearish strategy appears most suitable. The 2-week price history reveals a downward trend, and the forecast predicts continued declines. While the support price suggests a potential floor, the resistance level is significantly higher, indicating an uphill battle for Aave to regain lost ground. Therefore, an aggressive short-term investment strategy would involve entering a short position around the current price, which sits near the higher end of the recent price range. A stop-loss order should be placed slightly above the current price to limit potential losses if the price unexpectedly rises. The target price should be set at a level below the support price, aiming to capitalize on the anticipated decline. This strategy capitalizes on the bearish momentum indicated by both historical price data and the forecast, allowing for potential profit from a short-term price drop. Based on the provided EOS price data, a cautious investment strategy focused on the short term seems most appropriate. The historical price data shows a recent downward trend, with the forecast predicting further declines in the coming week. While the support price offers a potential floor, the resistance level is significantly higher, suggesting limited upside potential in the near term. Therefore, a short position on EOS is recommended. An entry price around $0.804, slightly above the current price, allows for some buffer against immediate market fluctuations. The stop loss should be placed at $0.823, just above the recent high, to limit potential losses if the price unexpectedly rebounds. The target price can be set at $0.763, aligning with the support level and aiming to capitalize on the anticipated downward movement. This strategy allows for a relatively low-risk approach to potentially profit from the short-term bearish outlook for EOS. Based on the provided Tron price information, a cautious short-term investment strategy appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, with the forecast predicting further declines. The current price is close to the support level of $0.1942, indicating a potential for further downward movement. Therefore, a short position is recommended to capitalize on this anticipated decline. An entry price of $0.233, aligned with the current price and close to the recent high, would be appropriate. A stop loss should be placed at $0.241 to mitigate potential losses if the price unexpectedly surges. The target price should be set at $0.1942, the identified support level, aiming to capture the full potential of the predicted downward movement. This strategy prioritizes risk management by setting a stop loss and focuses on a short-term profit opportunity within a defined timeframe. Given the price trends and forecast for Suncoin, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a consistent downward trend over the past 2 weeks, with the forecast suggesting further declines. The support price at $0.02144 and the resistance at $0.02368 highlight the current price range. While there is a slight upward movement predicted in the forecast, the overall trend remains bearish. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.0225, aligning with the forecast's lowest point, would be suitable. The stop loss should be set at $0.0232, slightly above the current price, to protect against unexpected upward movements. The target price should be set at $0.0215, slightly below the support price, allowing you to take profits before the market potentially reaches major support. This strategy aims to mitigate risk while capitalizing on the predicted price decline in Suncoin.